Bitcoin hit this low in the high 62,000 level today and bounced, getting back, dropping below the 50 period, getting back above it, directly below between 60,000 and 62,000. This is where a good chunk of the liquidations are and stop orders. So again, if we start pushing down below the 50 period moving average, you're going to be triggering all this, and that will escalate the selling. Now, we can bounce. We could see the shorts stopped out if we try to clear 66,000, and I'll show you that. So right here, between 60 and 62,000, the low 62,000 area, and more strong, even more potential liquidations in the mid to high 61,000 area. So this is where all of the liquidations are and the stops. Now, zoom out a little bit, you can see it even more here. Again, the 60 to high 61,000 area, low 62,000 area. We halted the sell-off at the high 62,000 area. So if you start reaching the low 62,000, high 61,000 area, you're going to start triggering all this stuff. But here, if we see a push higher, again, people going, oh, it's the right shoulder of an inverse head and shoulders. We have liquidations up here above 66,000 in resistance area that I've been talking about, the 67,000 to 70,000 range. Well, at the low end of that level, at 68,000, again, then the shorts would be liquidated. We push up. Once they're liquidated, then we can turn down. So just something to be aware of. Again, we're right between, sideways, right between these two groups. If we go up here, pop higher, again, do what we've done in the past, top out the shorts, create another peak there. Quickly, once they're stopped out, you quickly reverse. If we're done, then we need to take out this level and eventually come down over here and take out the 57,000 area. So just be aware of these levels. And again, if we were to try to rally higher, right now we're trying to take out the 200-week moving average or bounce off of it anyways. If we were to rally higher, the 20-week moving average, the blue line right here, is resistance. That's just under 70,000 right now at the high 69,000 area, right around the 69,700 area or so, just slightly under that area to round up. So again, the 20-week moving average. Again, we could test it. After getting above it and breaking it here, you went back and tested it. Could do that here. Got above it, broke down below it with the bear market rally. Could test it again, possible. But if we close this week back below the 200-week moving average, then again, the move is done. And again, that will likely give us a close below the 50-week moving average before we see the close here by the final print by the end of the week for the 200-week moving average. Here in the weekly time frame. You get 1 bar per week here in the weekly time frame. So the 20-week moving average under the 70,000 area, right around the 69,700 area, just rounding up. Now quickly, wave 2 may be done at 66,000, just under this trend line, but if we try to go a little higher, we might overthrow it and even change it and change the angle of descent of the channel. Once this wave 2 is done, or if it's already done, and I put it a little higher so you can see that we're just directly under that trend line. Once it's done, or if it's done, it's going to be followed by the crash wave 3. In all likelihood, that will be a very scary drop. As I've said, again, we're probably not going to get above the 74,000 area. If you do, you're going to start seeing signals in the weekly time frame all turn back to bullish, and this is probably nothing more than a counter trend rally that's going to be followed by a very, very scary drop, a very sharp decline. Please support the channel. Please support the channel with the link directly below that allows me to be able to provide you this information. If you like my charts, then you will. And if you like my indicators, then you will, because they're accurate. You've been right. If you find that information helpful and educational, then please support the channel. Rather than getting sponsors and selling you something or sending you to some exchange, I just ask that you do what you can to help out. Again, very, very simple. I just put the information out there, talk about Bitcoin. I'm not here to sell you something. I'm not here to try to send you to some exchange to get kickbacks on your trades. I'm not here to do that. Signals have helped me be a very successful Bitcoin trader. If they help you. And if this information helps you, please take a moment and support the channel. Follow the link below to take you to a secured site and you can donate any amount you want. Anything helps. I need to hear from you in order to make that work. So please let me know you want this information, that you like this information, that you want me to do this rather than go play golf. This is the stuff I look at every single day. I flip through my charts and look at my charts every day. So please support the channel today. I thank you for your consideration for that. Again, if we're going to turn, we got to see the signal here turn back to bearish. We're seeing some signals turn back to bearish. Right now you have a mixed bag. Some are bullish still, some are bearish. Here we had these warning signs right here, right after the peak at 66,000. We had these warning signs, but momentum was going to shift. And that tells us we're either going to get a pullback or we're going to get a reversal. Some of these signals here marked pullbacks. The one up here marked the reversal. I'm watching, do we still try to go higher? And if we do, then we'll likely see signals like this turn back to bullish. But I have mixed signals. Some are bullish, some are bearish, and that's because we're going sideways. So again, watch the 50-period moving average. If you close below it, and we're trying to bounce off of it today, if you close below it, you're going to see a lot of signals turn bearish. So we have signals turning bearish yesterday and some a little bit before that right here, turning off the midpoint. So that could be it at 66,000. Got to close below this 50. We drop below it, but we're trying to bounce off of it. And then we got to see all the signals in agreement turning back to bearish. And right now they're mixed. Some of them are bullish, some of them are bearish, and that's because we're going sideways. Yesterday by the close, we did see some signals turn bearish. Others are still hanging in there, so watch that 50-period moving average. Showing you some signals that are still are turning bearish. Others are still hanging in there. Here's still bullish. So again, I'll be watching to see, do we close and take out the 50-period moving average in the daily time frame? And if you do, you're going to see a lot of signals begin to turn. Some signals bullish, like right here, and what I just showed you. Other signals bearish. We take out the 50. That's the line in the sand. You take out the 50 on a closing basis. Stay below it. Can't get back above the 50-day moving average in the daily time frame, as I'm talking about in this video. That's going to be a sign of weakness. If you bounce, then we might see the rising wedge evolve into a bear flag. Looking for clues. Right now we're turning off of the midpoint here, but again, I have mixed signals. Now, we're not only trying to bounce off the 50, but we're trying to bounce off the 200-period moving average here in the 4-hour time frame. The 50 is still above it. If you can bounce and get back above the 50, back above the cloud, then maybe you got a shot at, again, this move not being done. You lose the 200 here. You lose the 50-day and the daily. Then the rising wedge breakdown can play out with a breakdown and a back test, and we can break down and we can be on our way down to test 57,000 to try to take it out. Still might get another reference point of a larger divergence here, much like what we had back over here. This thing dragged out, and don't want to rule that out. But like I said, we start seeing all the signals turn bearish. We start taking out the 50, start taking out the 200 here in the 4-hour time frame. 50 starts dropping back below the 200 here in the 4-hour time frame. Then again, all bets are off. The rally, the counter trend rally could be done. As I've said, it's still possible that we reach the downward trend line here. This is our linear scaling, the log scaling. It's a little bit higher. It's still possible we reach the purple line here. With each counter trend, the red line or the purple line, the red line or the purple line has acted as resistance over and over again. So if we can rally, maybe here it's close but no cigar, but if we can rally, we can go to the trend line or even try to overthrow it, still try to go to the purple line. Probably not going to be able to get above the red line. If you do get a bigger rally, stall at it, just overthrowing it as we did back over here. Stalling at it like we did at the final exit point. So again, these are the levels I'm watching. I'm still watching the trend line. And again, if we bounce off the 50 period, we still may buy some more time. In this trend line, the angle of descent could slightly change. Trend lines change all the time. We've expanded the channel. Here, we had this declining trend line from the final exit point. We broke above that. They said, the crowd said, oh, it's over. The sell-off's over. 80,000 is the bottom as we rallied up to the purple line and then collapsed by 39%, nearly 39%. We had a trend line from there and we got above it. And I told you the channel is likely expanding again. And we went up here. Channels expand, trend line slightly changed, but the expansion of the first channel didn't stop new lows. The channel of the second expansion of the second channel didn't stop new lows. Channels expand, trend lines change. So we could still rally to this trend line and still even overthrow it and create what could look like a breakout when it is likely another fake out. Plenty of those. We saw a fake out at the top. We saw a fake out over here in January. We saw another fake out right here. And then again here, people keep buying the dip that keeps on dipping and keep buying the fake breakouts. They keep buying the breakouts that are fake outs. So again, some levels I'll be watching. Now, if we take out the 50, I got to see all my signals turn back to bearish. We need to see it close below the 50-day moving average in the daily time frame. Just a quick update ahead of the Fed. Again, if we see a hawkish Fed possibly preparing the market for preparing markets for coming rate hikes, we could either see a sell-off with the Fed or a post-Fed sell-off. Sometimes there's a delayed reaction. And again, just something to be aware of, because again, what we've been seeing is a push down, and a good part of that due to the hawkish Fed. Now, this is the Bitcoin daily chart, and we were down 1.67% at the lows today. Yesterday, we were down just over 2.5%, turning there off of the 10-period moving average. We had gotten above. We had broken this trend line. We back tested it. We got above the 10-period, and we got rejection there. So the question right now is this move done? I have a couple of scenarios I'm marking here. Again, you back over here, we're going to crash down to test this low, likely to take it out and then get some kind of rebound. That's what's happening. And I told you over here, if we bottomed, we need to get back above the 20-period moving average. We've done that. So we saw evidence of a bottom. So now the correction for what I believe is wave 2, I believe wave done, the blue count here is done, and a 5-leg push lower, the red count. And I believe we're getting an ABC back up. And again, maybe it's done, maybe it's not. Again, shorter term price fluctuations can be harder to call than the main movement. I told you over here at the bottom when we were rallying back up, if we have bottomed here, I told you that we were going to go back up to the 38.2 Fibonacci, just below it or just above it. We went just below it here at 66,920. If we form a doji today or a hammer at the 50-period moving average, then again, we still might try to go up to this level. And you might be seeing a rising wedge evolve into a bear flag. I told you back over here, but again, when we were trying to rally back up, I told you if we bottomed right here, if we get confirmation of that by pushing above the 20-period moving average, and I told you at that time as well, if we validated a short-term bottom, then you're either going to get a rising wedge, and I even drew it in beforehand, a rising wedge or a bear flag in all likelihood. We had a bear flag over here. We had a larger bear flag over here. We had a rising wedge right here in the bear flag. I told you the narrative is going to be, and if we do break to a new high, the narrative right now is going to be, oh, Bitcoin's forming an inverse head and shoulders pattern. And we even saw that over here with the, I told you some of them were saying it with the slanted neckline. Again, telling you what the Moon Boys are going to say before they even say it. Just as I told you that when we dropped to new lows, they were going to say the 200 and 300 week moving average is the bottom. And you even have people now saying, again, the 4-year cycle's dead now and that we're not going into the fourth quarter, into October. Again, these are the same people that told us that the 4-year cycle was dead at the top before dropping and crashing 54%. These are the same people that told us the crash was never going to happen and that we had the super cycle and the 4-year cycle was dead back then. They regurgitate the same propaganda, the same nonsense over and over again. And it's amazing because people continue, the crowd continues, the herd, they continue to fall for it. It is absolutely incredible. Promote these hoaxes. Remember the Bitcoin strategic reserves? Government's going to be buying all this Bitcoin, going to the moon. The government never said that. The Moon Boys said that. It proved to be another moonboy hoax. Bitcoin's falling the M2 money supply. Bitcoin's in this new super cycle. And the 4-year cycle's dead. It's hoax after hoax after hoax. And people continue to fall for this stuff. Absolutely incredible. It's amazing the hoaxes that they promote, but what's even more amazing to me is that people continue to fall for it over and over again. Hoax after hoax after hoax. Incredible. We're getting the MACD rollover. So here's the deal. Either this is done, okay, either this is done and you're now starting this next leg down of crash wave 3 and you're getting maybe this these possible smaller subwaves of a wave 1 or maybe wave 1 and 2 here, but probably smaller subwaves as we had over here, smaller subwaves that made up the wave 1. So that's probably what's going on here if we've peaked right here at 66,920 and completed the ABC. If this is evolving into a bear flag, and this is the log scaling, the linear scaling, it's much cleaner, much more parallel boundary on the linear scaling. Show it to you in a second. If we go higher, if we get a bottoming tail here at the 50 with a doji or a hammer or something like that, and we try to rally, we can clear the resistance zone now, which is right here, the lower high, and the higher high at 66,900. Maybe this evolves into a more complex WXY in this more recent push higher, and we still go up here into that 67,000 to 70,000 area that I've talked so much about, closer to the 100 period moving average, closer above the 38.2 at 67,200 and change, and moving closer towards the 50% retracement at 70,000. Possible. Regardless, it doesn't matter. And Elliott Wave is using the process of elimination. Oh, you're supposed to know the future. Some people have such unrealistic expectations. Again, Elliott Wave is, I have different counts going because look at impulsive and corrective moves. Use a process of elimination. Possible 3-leg push down here. We go higher, maybe, but it could also be the start of a 1, 2, and maybe even if we bounce, something bigger going to the downside with an impulsive move. So it's too early to tell. Now, we'll see how we close by the end of the session. Do we hold with a bottoming tail above the 50 period? And then if it means anything, we've got to get confirmation and a fall through, and then we got to be able to clear the resistance zone if we're going to try to go higher. We could see another fake breakout coming up in here, turning up above the 38.2 Fibonacci and then turning down in another fake breakout. We continue to see the fake breakouts over and over at each counter trend rally. So MACD rolling over, not allow this other scenario where I have question marks, W, X, Y, and the question mark C, may not allow that scenario to play out with the MACD rolling over. And if it goes negative again, then again, it is very possible 66,920 is the peak, and that's all she wrote. Doesn't matter. Either way, whether we go a little bit higher or whether we fill at 66,920, it's going to fail. We're eventually going to go down and take out 57,000. I told you, again, after the bottom here, I'm going to rally up to the 38.2 Fibonacci, just under it or just above it, somewhere between, if we got above it, 67,000 and 70,000 or so, under 71,000, or we could remain under it, as I've said, under the 38.2 Fibonacci. I told you I thought we could go higher, but I told you I could be wrong about that. It could just end right here. I've talked about both of these scenarios at great length and detail. What I could tell you is that once this rally is done, whether here at 66,920 or whether a little bit higher above the 38.2 Fibonacci, the rally is going to fail and take out 57,000. We're going much lower. Maybe we do that with the Fed immediately. Maybe we get a post-Fed sell-off afterwards. It's going to happen. Now, Bitcoin, I tried to turn positive during this session. It is now down 0.36%. Again, going to be watching. How do we close? Do we get a bottoming tail by the close, or it gets canceled out by the close? Right now, we've sold off, again, 1.67% or so, and we're trying to rally back up and get back above the 50. Here with our linear scaling, it's a little bit nicer looking of a bear flag. So does the rising wedge breaking down and back testing give us a bigger sell-off, the breakdown of that blue trend line right there? Or does this now evolve into a bear flag and we climb back up and come back above the 38.2 Fibonacci, move above 66,920 and go up and slam up into this trend line right here with their linear scaling, going up towards, 68, 69,000, 70,000 towards our 100 period moving average, but not getting above the 200 period moving average, which is currently dropping. 200 period moving average right now is 71,000, just under 71,900. So we've lost that 72,000 area. Again, you're probably not going to get above the 200 period moving average. And again, if we do go higher, you'll probably stall around the upper boundary of the cloud near the 100 period, somewhere between the 38.2 Fibonacci and the 50% retracement. So just wanted to touch on this. Does the rising wedge now break down? Now that it's broken down, I should say, does it now play out and we go down and take out 57,000, or do we see it evolve into a larger bear flag pattern? Risk as the MACD is rolling over, that it moves into the negative territory, and that's it. And again, 66,000 could be it. There's a lot of chatter that we're now forming this inverse head and shoulders pattern. And again, start moving above 73, 74,000 with this move right here, getting a larger Fibonacci retracement of the decline. You're going to see the weekly signals turn back to bullish. I think it's more likely that we stall. And as I've said, the 20-week moving average, the 200 here in the daily will likely not be exceeded. We'll probably not get above those levels. Exactly what I think. Most people don't have the guts to do that. I do. I told you we're either going to get the lower high here, and I told you this long before we rallied up to these levels, that I told you we're either going to get the lower high below the 38.2 or just above it. So that's where we stand. Don't think you're going above 71,000, above the 50% retracement. As I've said, I think you'll be under 71,000 at the 67 to 70,000 range if we do clear the 38.2 Fibonacci. So we'll be watching to see how we close here. Even if we try to rally surrounding the Fed, it's dropping back down. Hopes of negotiations and a deal between the U.S. and Iran. And again, oil's risen by 39%. It's pulling back at resistance, as I talked about in my last couple of videos. I've shown you the oil chart. Once the pullback is done, it's going to go and it's going to break to new highs and break out of the bull flag. So a bearish MACD cross, if it goes negative, then maybe that's all she wrote here. So be watching the MACD. The rate of change going into the negative region now. So again, this move could be done. We drop and close below the 50 period moving average and see all the signals turn bearish. Wanted to show you this on the linear scaling here. This possible rising wedge could evolve into a bear flag. But if we break the 50, break down, see all the signals turn bearish, then the counter trend rally could be done.